So this is the reason why I think trading a mechanical system is much better than discretionary. So just a bit about me. I actually came from discretion, you know, higher risk reward, having context, pro trend, counter trend, having all of these different nuances. Now, it's much more harder to follow something like that. My mechanical system, however, is so much more simple. It's a fixed criteria. That's the difference between mechanical and discretionary. Is mechanical is fixed. You're not changing anything. Every single day when you trade, you are trading the fixed system. Nothing changes. Discretionary, however, is when you have all of these different things, different analysis. So, for example, you do your daily analysis, then you go on the 4 hour, 1 hour, M15, lower time frame confirmation. You will have all of these different top-down analysis and views of reading price before you make a decision. Now, it's hard to do that. It's hard. It's much more harder to follow, right? And for me, it's actually even harder to collect data upon. When something is mechanical and you're new to trading, it's a fixed system, a fixed take profits, a fixed stop loss, a fixed break-even protocol, and a fixed criteria. Now you tell me, look how much easier it is to trade that compared to when you have a discretionary system where you're doing a top-down analysis. You have a daily bias, you have all of these different things. You're trying to identify which is a strong POI, which is a weak POI. You have so many different things. Now, I came from a discretionary model. I still actually trade that discretionary model on CFDs. The higher risk reward, the 1 to 3s, the 1 to 5s, 1 to 10s. But it's hard to do. To be honest, it's only been a few months since I've been trading mechanically. And I've collected more data in that few months than trying to trade discretionary over 1 or 2 years. Maybe 2+ years of this current system that I've been trading. I've collected more data through trading this mechanical system than the discretionary. That's crazy. Because it's so easy to contaminate your data with the discretionary approach. You can very, very slowly realize that you keep changing the system with the discretion. With mechanical, you're not going to do it. Because when you make your hypothesis, before you even go ahead and test it in live conditions, you say, okay, I believe that this is going to be a system, this is a potential system that's going to have a positive expectancy. So, for example, for me, my system is inducement at the session open, stock open, NASDAQ, 2-leg protocol on the M1, engulfing entry, and then I'm trying to target an impulse. That's my mechanical system. That's it. That's my hypothesis. Now, that's not going to change. If it changes, you'll know instantly, okay, I'm changing my system. I'm changing my system. But with discretionary, you'll realize that, okay, even though with discretionary, you still have a criteria. For example, my discretionary model is build up, inducement, mitigation. But the thing is, there's different time frames I'm looking at. There's different ways I'm reading the price. So I can actually, without realizing, end up changing it every other week. I can, because I might be feeling a little bit of FOMO, I might decide, okay, I'm going to trade a bit more, less. That's now trading differently to the system. Although it's the same system, but you need to understand that it's involving all of these different things, right? All of these different steps. It's harder to follow. And a lot of the times what ends up happening is that even though you try to stick to the discretion, when you take invalid trades, you don't even know what the problem is. You don't even know what the reason or what the cause of the invalid trades are. You will think to yourself that, okay, it might be technically. You'll go through your technical analysis. You'll revisit price. You go back in the candles and you replay it, and you'll think to yourself, hold on, no, I don't understand what it is because I followed my plan. What is the reason? Why is this trade an invalid trade? Because you realize that it's still not fitting the criteria. You blame other things. Oh, it might be my psychology, or it might be it might be the market conditions. It could be. But the thing is, with a lot of discretion, you don't really know. Now, discretionary is really, really good. I'm not going to say it's not good, but it's really good when you're advanced. Mechanical will always be the best way. So many times, right? Like, I might take a trade on discretion through a discretionary trade, and I am so confused as to what even happened during the trade. Whereas mechanical, I execute a trade, I look away, I go away, I come back, it hits TP, hits stop loss, that's it. That's it. And it's much more easier to track that data because it's a fixed criteria. That's it. Valid trade, invalid trades. That's basically the only things I'm tracking. I'm tracking some other things as well, but the main things, invalid, valid. But with the discretion, you're testing, which break-even protocol, which partial taking, which POI is strong. Do I trade reversals? Do I trade continuations? Which POI should I be trading from? Which sweep of liquidity is the best? Why do that? Why go through the unnecessary stress? And a bit about me as well, again, is when I was trading that discretionary approach, I started off with a lower trade frequency. I had a higher risk reward, and I don't like losing. With the discretion, you have to do a lot of inner research upon yourself. You have to understand your personality. Are you someone that likes or is happy with losing? Or are you someone that doesn't like losing? Are you someone that has tendencies of revenge trading and FOMO? With mechanical, you don't need to do much of that. You can literally make the system aligned to your personality much more faster. With the discretion, you'll have a system where you have to tweak it. Now, that's one good thing about discretion, is that you can kind of choose. Do I want to have a high win rate? Do I want to have a low win rate? Do I want to have a higher trade frequency? You can change these things, but you need a lot of data, and that data collection can take you years. I recommend trading a mechanical system. Find something, either carve it out yourself or find something online. Test it, build it, tweak it, use it, keep utilizing that mechanical edge, rinse the prop firms, and at the same time you can work on discretion. It stops so much mental pressure on yourself trying to make something work with the discretion. Back to what I was saying before, which was I was trading a higher risk reward model with a low trade frequency because I don't like losing. I want to have about a 70 or 80% win rate. So that means I have to accept that I'm going to have a lower trade frequency. When it comes to my system, A+ setups, maybe once or twice a month I was getting them. You can see, for me to get 100 trade sample size, which is a good enough sample size to prove that it has a positive expectancy or not, that would have taken forever. And I knew if I need to progress, if I want to get more market experience, I have to increase my trade frequency. And what do you think happened when I did that? I made a big mistake which cost me months. Instead of gradually reducing my win rate and slowly increasing my trade frequency, what did I do? The next week, boom, I saw a setup, took it. Next setup, I took it. Next setup, I took it. Sure, the trade frequency increased. What do you think happened to my win rate? It collapsed. It absolutely tanked. I did not see a winning trade for months. And even when I finally got my middle, zone in between, okay, decent win rate, decent trade frequency, when I finally got that balance, which is very hard to do with discretion, it was taking so long to implement that. I understood completely what I need to do, but still, because of all of those losses, my psychological, my mindset was just it was gone. And so during that time, just by watching price every single day, watching the 2:30 p.m. stock open, I was realizing and seeing something, a pattern, pattern recognition. I was seeing something happening every single day. Then I thought to myself, why don't I make a system out of this? Because I'm seeing it happen every day. So what did I do? I go ahead and tested it. 1 trade a day. Mechanical system. The feedback I was getting was much more faster because it was rules that I could actually stick to, unlike the discretionary trading. And then when I paired that with futures, I thought, wow, that would be really powerful, because not only am I having a system that's repeatable, it's consistent, because the risk reward is the exact same. It's consistent. So I'd be not only getting feedback fast, I'd be able to collect 100 trade sample size faster. I'd be able to stick to the system faster, and I'd be able to get payouts faster. Discretionary, complete opposite. And I'm not saying that discretionary doesn't work. I have a discretionary model and I love discretionary, but I'd always choose mechanical over it. What's something that's really powerful is if you trade a mechanical, consistent system with a fixed risk reward on futures, and then you take discretion to CFDs, I think you'd be absolutely smashing it, which I'm in the process of actually doing that, of having futures, mechanical, CFDs, discretionary. But I recommend sticking to mechanical. And the thing is, with mechanical systems, is forget about YouTube videos. First of all, if you're very new to trading, of course, watch some YouTube videos to get like an understanding of the markets, baby pips or whatever. But if you've got a decent, maybe 6 months to 1 year of market experience, bro, just watch whatever pair you're trading. Look at this, whatever session you're trading. Just watch how the market opens. Just watch. Forget about everything else. Everything else should be out. Forget about everything else. Just watch how price reacts at the open or whatever you're trading, and see. Keep watching it. And then you'll realize, you'll start to see that something happens every day. Every single day you'll actually start to pick up patterns. And then before you know it, you're already forming a mechanical system. Because you haven't had to watch countless videos on YouTube. You haven't had to strategy hop just to find something that matches your trading style or matches your personality. You didn't have to do that. You've skipped all of those steps by just deciding to trade mechanically. Because all you've had to do now is just watch price every day, and then now you've found something that potentially works because you've seen it happen every day. Then if you do that and you keep doing it over and over and over again, now you're already bringing data to your journal. You're bringing that data. Now, the only thing that the limiting factor is you. You need to be able to stick to that. If you can stick to it for 100 trades, that would be amazing. Literally, I'm going to leave it with this. Have a criteria, have a hypothesis, just like a scientific experiment. Find your criteria, stick to it. Every single day, stick to it until you have 100 trade sample size. If in that 100 trade sample size you have a positive expectancy, amazing. You go on edge, you can go ahead and rinse prop firms. If within those 100 trade sample size you don't have an edge, don't just completely scrap the idea. That's when you tweak things. That's when you need to understand, okay, maybe I add this variable. Maybe I remove this variable, just like a scientific experiment. But you need to make sure that you have a target. 100 trade sample size is amazing. That's a good amount of sample size. If it's too much, then depending on your trade frequency and all of these things, but 100 trade sample size is usually good enough. You stick to that, you will understand that progress will be made so much faster. It will feel slow in the beginning because you're doing less, but less is always more in trading. And that's all for now. Follow my Instagram, check out my Telegram, and see you guys later.